Hello, everybody. Welcome back to another weekly market review for F45trading.com. This week here, we're going to be discussing the Monday, the 29th of April to the end of the month, finishing off April and into Friday, May 3rd. So we're done another month here in a couple of days and on to a new one. So we've got lots of activity happening in relation to news events coming out that you definitely need to be aware of. Pull those up here for you now. Monday's fairly quiet. A lot of medium impact US dollar news starting off Monday morning at about 8:30 a.m. And then going into and we do have Bank of England Governor Carney speaking for the pound sterling early Monday morning before New York starts up. And then going into Tuesday, we have a whole bunch of medium impact euro and cable news, and then Canadian dollar GDP. Meeting minutes are being released at 8:30 a.m. And then we have consumer confidence at 10 a.m. for the US dollar, and Governor Poles is speaking for the Bank of Canada at 11 a.m. on Tuesday. So Tuesday, the Canadian dollar is probably going to see quite a bit of movement, and we should have a fairly nice ranging day on Tuesday. I'm expecting. There's no real landmines in there that we got to be too concerned about, so I'm hoping Monday and Tuesday are going to be two very nice fluid days of trading, because that's pretty much about all we're going to get. I think Wednesday we have some European bank holidays. We've got some more pound sterling news. We've got a whole lot of big high impact news events for the US dollar, and these are going to impact absolutely every cross pair that's with the US dollar, all the majors. So Wednesday is a day you definitely do not want to be trading, or if you do trade, make sure all your trading is done well before the 2 p.m. New York time that Wednesday afternoon. So to be honest with you, with the euro being closed, bank holidays, and all this news, I probably won't be doing any trading on Wednesday. I'm going to be leaving all my trading to Monday and Tuesday to try and grab my pips for the week on those 2 days. And unless something extraordinary happens and like there's a setup in there that is too good to resist, then I won't be doing anything on Wednesday. But if I did, my trading would be done after this ISM manufacturing news at 10 a.m. New York time. I would not be holding anything over for the FOMC. Going into Thursday, that's when all the cable news hits. We have monetary policy statements for the cable on Thursday, so whatever you do, don't trade the cable on Thursday. And then we have a yen bank holiday and some building approval meeting minutes for the Australian dollar. So Thursday, the cable, like I say, it's going to be on the move, and especially after FOMC on Wednesday, again, you just don't want to be trading the wrong pair on the wrong day, and cable is definitely the wrong day to trade on Thursday. And then Friday, obviously, we've got non-farm news coming out on Friday. So Friday is definitely not a day you want to be trading anyway, because it's very highly unlikely you're going to a bit of a merry-go-round and ups and downs and sporadic price action. So if I were you, I would only be trading Monday, Tuesday this week, and I would pretty much be sitting on my hands for the rest of the week just to be safe, because we're definitely going to see some volatility injected into the markets, and to finish off the week. So, next week is not too far away. I'm pretty sure a couple of days trading this week, you can get a couple of decent moves in, call it a day, and wait until more probable, better environments for next week would be my advice. So let's jump into the charts here real quick, and let's see what we've got. So going into the US dollar, I had anticipated a run higher above these highs here. We got that last week, and price came in and traded well above the 97.60 level. And now we're seeing a little bit of a retracement back into that level. On Friday, we had a nice big down day, and Sunday's opening candle now, at the time of this recording, it's about midnight New York time Monday morning. So we had a nice, we're starting to see continuation to the downside. Now, I'm looking and watching this here. I don't want to see this come down too much. 97.60 would be a level I'd like to see them stop at. Definitely don't want to see them come down, though, into the 97.40 level if we're going to remain bearish. It can certainly come down, wick in there, and then run higher. But if we do start closing below this old low here from Friday, then there's a very good chance that we could come all the way back down into this, sorry, not quite that deep, but back into the 97.10 level. And that's pretty far down on the chart. I would not want to see price have to go that far, because then it's just going to be that much longer for us to have to get back up into bullish conditions and running these old highs. And ultimately, we've got a nice target on the upside right here of 98.40. So that's where I believe they're going to take price after this nice big run up in here. But we're going to have to wait and see what they want to do just to verify. But I think we're going to have a couple of down days here, or maybe one big down day here. And I wouldn't mind seeing them come back and retouching off basically off the high of this old candle right here. And that comes in at 97.43. Like I say, about 97.40 on the downside would be sort of where I'd be looking for support to enter. And if we go lower than that, then there's a good chance we could roll all the way down to 97.10. So, you know, anywhere in there, we could see a reversal. If it is going to reverse, now if price comes all the way back down into this consolidation range, and I'm going to say pretty much right in around here, if we start coming back down into this range here, under the 97.10, there is a very strong chance that this was going to be the high that's going to be set for the next interim little while, and we could see a downward retracement, a fairly strong downward retracement on the US dollar. And if you look at that, I mean, that certainly could be par for the course. As you can see, they come up, create a couple highs, have a deep retracement, and then run right back up, take those highs out, and then have another deep retracement, and then we just took out that high. So again, there is the likelihood that we could see another deep retracement. Now, whether they get back below here or just stop in this range, we're going to have to wait and see. But again, my line in the sand is basically this red block of price action right in here, this highlighted area right below 97.10. So call it about 97.00. I'm sorry, 97 even, 00. 97 to 96, you know, 90. That's sort of my line in the sand. I don't want to see price come down into there, because if it does, then it's going to be all that much harder for this thing to get back up in here and run that high. I think there's a likelihood they're going to roll it over. So anyway, still looking for bullish conditions. Unless that gets broken, then we'll turn to bearish, and we got lots of targets on the downside to work with, so no problems either way. But we've got to make sure we wait and see what's happening here. And for the first couple of days of the week, there is a chance we could see this thing run lower. So if we go down into lower chart right here, a lot of confluence, like I say, at the 97.40 level. I'd like to see if we can at least get down to that level, and that basically just brings us back down to these old highs right in here. I kind of would like to see them just sweep below this low, retouch it back, and then run higher. That would be ideal to see. But certainly, you know, again, if we lose that, then just keep watching below, because there are several levels down here that we could run back down to. But I'd like to see some sensitivity at that level, and then a push higher, and then run price. Now, this is the high from last Friday, and that high from last Friday just barely got above the high from last Thursday, which was the high all-time yearly high, 2-year high, actually. You know what? When was the last time they were back up there? It was right here. So we're May 2017. So yeah, that hasn't seen these levels since for 2 years now. So like I say again, that was that high there. We just swept it, and now we're running south. So this right here looks to me a bit of a reversal pattern. But again, the US dollar is fairly bullish. We're going to definitely find out here this week. It is FOMC. It is non-farm, and so they could be just pricing in, going a little bit lower to pick up some longs, and then we could see them run through these highs with you know aggressiveness, and running up into this 94.40 level. So we'll have to wait and see. But I do, you know, again, like I say, I am looking for them to run price lower, down into this region somewhere in here, maybe even a little bit lower. So we'll be watching that. And so if we're looking for lower prices on the US dollar, I'm going to be looking for higher prices, obviously, on Euro USD. If we go into there, same type of scenario. We had price come down, run these old lows down here. And actually, if you look long-term out, this low, this low here was holding up for quite a long time. And it came down, went down below it once, rejected, and then failed again here to get down. So pretty much created two equal lows right there, and then they smashed through that last week again. So, and now we're seeing price again wanting to rally back up, and I kind of like this area in here as an area for potential targets on Monday, maybe Tuesday, if that wants to get up there. Not too far away, it's about 30 pips from now. Certainly, if we do see lower prices on the US dollar, we could see this even come up into here. I don't want to see this, though. There's lots of targets up here that I've got identified where I think price will eventually run, but similar to the US dollar, there is a low on Euro USD that I would like to see them run down to, and that comes in at 110.20. Ultimately, I'd like to see them leave these areas intact up here, and then just basically roll over at 111.90 or even 112 big figure, and then shoot for those lower positions. That's what I would like to see. We're gonna again have to wait for price to develop a little bit going into Monday. But I basically would like to see them just sweep above this high right here and then reject and then go lower. But I do think, again, we're going to see higher prices going into the next little while. So, by the time you watch this recording, it could be Monday, and that high could have already been taken out, ran up to, and then reversed, and we could see prices coming back down. Certainly there is that option. But so just keep that in mind. I wouldn't be looking for them to run through this area in price right here. So I'll just maybe change colors on this just to identify the two differences. I would essentially like to see them just come up into this area, reject, and go lower. I don't want to see them come up into here. If they start coming up into here, then there's a very good chance that they could want to maybe look at starting to run these equal highs right above here. And again, so on and so on. And the higher it goes, the harder it is for them to get back down. And I may be a little bit more bullish to the short term than bearish. So we'll have to watch that. But I'm looking sort of right up in that area there. And if we do get a run up, again, 111.90, 111.85, anywhere in there would be good enough for me. And then we see price reject. Now we're at 111.58 at the time of this recording again. So, again, 30 pips, not too far away, and it should happen here fairly soon. If we keep getting bullish action like this, these are nice big candles in here, so if we keep seeing that, I doubt that'll happen. We'll probably just get short, choppy candles all the way up, and then hopefully they'll start running price over, but that's what I'm looking at there. Cable, very similar to the euro. We hit a low last week. That low came right down to this area here that I was looking at for a very long time. I've been talking about this level for a while. Cable is definitely still, anything could happen with this because of Brexit. And we're going to start to figure out what they want to do ultimately with this guy going forward very shortly. Brexit has a lot of very, very high impact decisions coming in this month, and we're going to know very shortly what they want to do. If they want to keep running out this old high here and continue to the upside, or if they're going to continue to the downside. I'd like to see them go higher. We just came from a big run up in price, and they really took a long time. It took them over a year to smash this thing down and hit these lows in here, and they've just been grinding higher ever since. I'd like to see them continue that, but just keep in mind, if we lose this low here and ultimately this low, a real good chance that they're just going to come right back down to this level here and come under the price there, and maybe want to rebalance down under here. But you can see the big rundown on cable. We've been up here, and we've hit the extreme highs and the extreme lows. Most recent, the extreme lows. So I'm looking to see if they can't run this thing back up into this neck of the woods here going forward. Again, I'm not necessarily bullish right now. I want to wait and see what pans out. I don't necessarily want to see them come above. If we're going to remain bearish, I don't want to see them come above 129. 1.300 on the upside. That would be sort of it for me. I think there's a good chance that they could come back and roll over somewhere right around these levels in here, about 129.75. So just short of that to 1.300 level. So we'll see what they want to do. But again, I am looking for a little bit more upside on cable, hopefully going into Monday, and then they roll back over and come just a little bit lower. I don't want to see them start diving for this low here for sure, but I would like to see them come down and just maybe sweep under this low one more time, and maybe even come back down sort of the middle of this range in here somewhere, and then reject. So we'll see what happens. Very similar to what the U.S. Euro USD is doing, but I honestly think that the pound is going to be a little bit more bullish. Whoops, I got the wrong one there. I think the pound is going to be a little bit more bullish than the euro, but that will remain to be seen. So I'm basically just looking for price to come up and then come back down. U.S. CAD, we got a whole bunch of news on U.S. CAD this week. So, you know, again, just be careful with that one. Mainly coming in on Wednesday. And we got Governor Powell speaking again on Tuesday as well too, so just keep that in mind on U.S. CAD. But again, I'm looking for higher prices. So 135.60. We've had this beautiful breakout out of here. I'd like to see them come back down, retest these areas, and then start screaming higher. That's what I'm looking for to happen. And I'll just zoom in a little bit here. We could come down all the way down to 134.00 again. I don't want to see them go that deep, though. Hopefully we get a fairly shallow retracement in the U.S. dollar, and very similar here. I'd like to see them just start to reverse price rate in about the 134.40 level. That would be sort of where I'd like to see them reverse. And then my ultimate target, 135.60, and potentially even higher. We do have some relative equal highs up here at 136. So that's where I'm looking for them to go ultimately long term. I think short term, within this week or maybe even early next week, they'll hit the 135.60 level. So I'll be looking for them to do a short run down here, gather some support, and then start to make another push higher. I like this breakout here. I like how it closed above, and just a quick retracement, breakout strategy here, retest, and then expansion to the upside. That's all I'm looking for. Very, very simple, and I'm hoping that this will happen early Monday morning. UJ, so very similar on UJ, just basically a rundown here. A 111 big figure on the downside is sort of my line in the sand. I don't want to see it go any lower than that, and to be honest with you, I think more like 111.25 is probably going to get tagged, and then I want to see this thing start pushing and shooting higher, and ultimately we have 1, 2, 3, 4 highs up in here. I think those are all going to be suspect and going to get run to the upside here very soon. So we're at 111.60 right now. Price could certainly just keep running to the upside and run higher from here. I would like to see it come down a little bit. And again, if the U.S. dollar, if we do see a little bit of decline, that could certainly bring the UJ down a little bit as well too, and run back into basically just under these lows right here, and down to the maybe potentially 111.25 level, and then reject and push higher. So fairly decent trade there if we could get that on UJ. This old high here, for instance, comes in at a good 325 pips. If we could get an entry from down here, that would be an excellent range. That's like a monthly range. It would take a very long time for them to get up there, and so that would be more of a swing trade for all you swing traders out there. And you could certainly day trade those all the way up as well too. Okay, last one here. I was going to talk about Australian dollar. More of the same on Australian dollar, expecting downward momentum. However, there are a couple equal highs up in here at 72.10 that we got to be careful of, and we have a nice big deep retracement off of this run down here after they just grabbed that low, and they failed to close lower than that low there. So a little bit suspect. We could see further run higher on Australian dollar to the tune of 0.7110, somewhere in that neck of the woods. So just be careful of that. I think there could be a little more upside on Aussie than some of the other pairs in there. Okay, but if we do see a run higher on the U.S. dollar, we should see a corresponding run lower on Australian dollar. So I'm going to talk about that, and moving on to crude oil. This guy here fell right out of bed on Thursday and Friday, took out some major levels, and now we're just going to have to wait and see what it wants to do next. We've definitely got some area of support where we're currently at, but just keep in mind, if we start running lower than the low of last Friday, so to see this candle, I'll zoom in a little bit here. You see this candle right here from last Friday. If Monday starts running lower and we start to challenge that and run below that low, they're going to take out these lows here, and there's a very good chance we could come right back down to this consolidation range. Now, I would sort of hope that price would start to stabilize right about the $60 level on crude. 60, maybe 60, 50 level, somewhere in and around there. But just keep in mind, they could certainly run that down there very easily. This is looking pretty heavy right now. There's a lot of stuff going on with OPEC, with the United States, with production and everything else under the sun. So, and this, keep in mind this too, like look at this bullish movement. We haven't had a real deep retracement on crude oil since, well, this entire range. And we're going all the way back to middle of December. So we're about going into 5 months since we have a decent retracement. Don't be surprised if we see one in here. And the other thing too I wanted to point out, if you take a Fibonacci from high to low, we're also creeping up into that 72% retracement range. So this whole area right in here, again, and I mentioned this too. I said just be careful because we could start to top out, and that's exactly what I think we're going to see happen. And we're probably going to see a pretty deep retracement, and we sort of bang right up into that level, this old consolidation level right in here, and then a big rejection, and a nice sell-off to ensue. So we could see more downside on that, so just be careful with crude oil. I am still bullish crude oil, but I want to see, I think we're going to come down for the next little while, potentially rebound off of the 60 level, and once we get down to there, then we can see sort of where it takes us. We may resume our bullish stance on crude oil, but for now I'm going to take my hands off of crude until we start to hit some level of support on crude oil where it's noticeable, it's identifiable, it's confirmed, and then we can potentially ride another bullish move higher. And whether that gets up into the 70 ranges or even this old one back up here at 75, that remains to be seen. But certainly that would be something that we'll look for here after this this little correction decides to run itself out. So I hope that all made sense to you. Give you some ideas to work for early in the week. Remember, Monday, Tuesday should be good days of trading. Wednesday, Thursday, Friday aren't going to be as highly probable, and I definitely won't be in the markets Wednesday, Thursday, Friday, and you probably don't want to be either unless you just want to go in and gamble, so just keep that in mind. If you want to learn more, if you're not a member and you want to see more because this stuff is it helps you out a little bit, by all means, please go down here to f45trading.com. Click on our website, and you can see all the options there that we offer. We offer people a lot of help with Forex trading and some commodity trading, and we have live one-on-one coaching. We have a chat room. We do live analysis. We do a whole bunch of stuff, so I think there's a lot of value there that you guys are going to get out of. And if you are a member, we will see you in the charts Monday morning. Thanks for watching, and give me a little like down here, and if you haven't already, subscribe to my YouTube channel by clicking this little button down here. And again, if you're a member, we'll catch up to you tomorrow. If not, then we'll see you next week with another recorded version. Thanks, everybody, and have a great week of trading.